Hey gang, Mandla here at FX Link. Thank you for joining us on this week's trade review videos. In this week's video, we are going to talk about some of the psychological effects of the Lotto bias and how to avoid being a victim of this particular bias. But before that, we are going to review some of the analysis that we have posted on our Sunday's market preparation video. And if you'd like this to see the analysis, click on the link on the top right screen. On your top right screen on this video, it will redirect you to the videos. Without further ado, I would see you to the charts. Alright, as you have seen on the video, you would have noticed that already our setup is met. We already have a double top, okay, a double top right here. Excuse me, wrong arrow. We already have a double top right here, a lower low, lower close, a retest of these lows or these highs right there. So what's left of us is that either you place a limit order. Let me take a line. I'll put a line over right here, okay. What's left is for price to retest these highs in order for it to minimize our risk and maximize our reward. So as soon as the market opened, all we had to wait for was a retest of these highs right here with a lower low, lower close. And as soon as the market opened, this is what happened. 2 bars later, price hit our entry point, but we had to wait for a lower low, lower close for entry reasons. Now, if you are an aggressive trader, you would have simply had your limit order with first take profits over to these levels of structure, then 10 to 11 pips high, put your stop loss 10 to 11 pips high, okay. So this is what continually happened. We already had our lower close, so our entry would have been lower than this low, okay, and we would still have a 1:1 risk to reward on this one for our first take profits. And for our first take profits, our second take profits, you'd have noticed, would I was shooting for an extension back to these lows right here, okay. While studying the market, you have to acknowledge that the market is random. So whenever placing a trade, you have to acknowledge that even though it's a high probability trade, you still have the probability of losing, right? So in this case, what did we have to do? The only thing we had to do is follow our own rules, because we have no control over the market. In this case, in this stage, the market, we have entered into the market, and the market can do whatever it wants to do whenever it wants to do it, right? So our first take profits come over right here, and this is what the market unfolded. Soon as the market hit our levels right there, we hit our first take profits. And mostly whenever price hits my first take profits, I break even, okay. And as I break even in order for me to be on a risk-free trade, so that if price does eventually comes back to my entry level, then I would be proven to be wrong on this particular trade, and I would be risk-free. I wouldn't waste any money. I wouldn't lose any money on this trade, okay. And during the week, this is what happened. Price gave us lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. In this case, when price eventually did give us a lower low, lower close, what you could do, if you were trailing stops, you would put your stop loss in ATR level above this low right here, since we have a lower low, lower close. So in this case, I would have put my stops 8 pips above this low right here. So it'll put me to 15. So I'll have to go to 96.15. Okay. So I would catch a little bit of profit on this particular trade, and let's see if then 2 bars later price hit our stop loss. You would have caught, in this case, how many pips? You would have caught 10 to 12 pips on this particular trade, and then got it stopped out. And let's see where the market is holding. Delete this. Let's see where the market is holding as of now. The market then continued off. So price began to rally, giving us higher highs, higher closes, higher highs, higher closes, and this is where we are right now. Let me take it back right now, and this is where we are right now, as price gave us a sequence of higher highs. Okay, higher high, back to support, higher high, we got back to support, now we get a higher high. Probably price can give us a trading opportunity somewhere in this zone right here. Okay, now as you take a look on the GB, on the pound CAD pair, right, just like similar to the video, we wanted to have a trading opportunity, right, as soon as price hits these levels of structure, which proved to be a quite significant structure level in the past, and we are looking to buy as soon as our double bottom and higher close or setup is met. So before our higher close, before our double bottom, before our setup is met, we cannot do anything in the market. Okay, we can only sit back, relax, and see what how the market behaves, so we can anticipate the next move. Then we had our higher close as soon as the market broke these highs right here. It's too bad. Let me draw this line. Soon as the market, excuse me guys, soon as the market broke these levels of resistance, we still are in a bullish bias, but we still have to have our setup met. So let's see how the market unfolded, and let's see how you can adapt if you need to adapt. Okay, so price began to form a resistance. Let's outline another resistant area right here. Okay, so price began to form another resistance right here. Okay, and price made a double top right here, right, then began to come down over right here. So let's see price. Now remember, we are looking for price to come here, double bottom, then a higher close, so we can enter. All right, now we have a lower low, lower close, lower than this particular low, right, actually retesting these lows right here. So let's see how the market behaved. Now eventually we have a lower low, lower close, spike down right here, higher momentum bar, followed up with what? A doji candle, which signifies an indecision of the buyers and sellers on that time frame, which is an hourly time frame, on that particular hour. Soon as the market gave us a doji candle, what you could have done is, if you are not looking for double bottom, higher close, if you are only looking for higher highs, higher closes, then you might have a buying setup. that would give you a risk to reward that looks something like this. Right? Stops below this particular low right here. Then targets, first targets, you might take your first targets right here. All right, which would be first targets is you have seen on the video. Okay, let me take it from here. First targets, if you have seen from the video, would be at a 382 retracement, which is back at these highs right here. Then a 618 retracement, which would be back at these highs right there. All right, let's see if price gave us a double bottom right here. All right, now as you notice, price, soon as it hit these support levels, began to be sucked up. Okay, after having bullish pressure, price hit our lows right here, giving us a double bottom. Then price began sloping up, giving us a bullish divergence, which would complete our signal, and then we would have entered right over here with a risk to reward that looks something like this. 91 pips for 100 pips, which would give you for 98 pips, which would give you a 1:1 risk to reward. And if you were shooting for extended targets, then you would shoot for at least a retest of these highs, or a retest of those highs that we looked at in the past right here. So let's see how the market has unfolded, and if we have hit our second take profits. But in this case, if you have entered on this particular trade, which would give you a larger risk, then you would have entered, then you would have had broken even on this one, since your take profits are hit, or your first take profits are hit, and you would have waited and stepped aside to see if your second take profits are hit. Okay, so let's see how the market unfolds. Price began to be rejected, and then we would have broken even on this particular trade, and the market now has hit our support levels right here. Okay, now since price has hit our support levels right there, what do you notice? Yep, we are indeed oversold at 19.9 right here, and price right now has currently given us a double bottom as of late. If you could pay much more attention, as price came right here, then we had some sort of retracement. Now we are retesting these highs, and we are currently having a bullish divergence on this particular trade. So second chance entry on this one, take profit level. So my risk would look something like this. Okay, stops below this low right here. Okay, something like this. Then targets would be on our first take profits, something like this. Right, let me make it green for guap. All right, then let me change the color of my risk and make it red. So risk to reward is something like this on this particular trade. First take profits, excuse me guys, so I put my position to risk would be something like this, 70 pips. Reward would be 128 pips on this one for first take profits. Second take profits, they would have to come back to these structure levels, which would give me a 190 pip reward on this particular trade. The Lotto bias relates to the increased confidence people have when they in some way manipulate data as if manipulating the data is somehow meaningful and gives them control over the market. Right? People really like to play the Lotto game. Why is that? Well, first, when you play Lotto, you get to pick some numbers, and if you happen to hit all of them, you become an instant millionaire, just like that. Right? Like that, you become a millionaire. What people don't understand is that the odds are so stacked against them that if they bought 1 million tickets, they would not be likely to win. People think that because they get to pick the numbers, that their odds of success are somehow improved. And that's when the illusion of control comes back into play again. In this case of speculators and investors, this means that simply people want to know what to buy and when to buy. That is why so many signal services are making so much money on many traders out there, because most people would rather have somebody else tell them what to do rather than doing the job themselves. I have fallen victim once in my past as a trading rookie of this psychological bias, because I have become fascinated by entry signals back in the past that I perceived those signals to be synonymous with a complete trading system. And it's so good because you get a sense of control with entry signals, because the point at which you choose to enter the market is the point at which the market is doing exactly what you want it to do. Has anybody else done that? And as a result, you feel like you have some control, not just over your entry, but over the market. And unfortunately, once you are in a position in the market, well, the market is going to do whatever it wants to do, whenever it wants to do. You have no control of what the market should do. The only thing you have control over is your exit, your take profit, and your stop loss. Right? So the only thing that we can do to avoid being a victim of the Lotto bias, okay, is by understanding that the Lotto bias in many cases is a way of dealing with the anxiety of not feeling in control. And most people would rather pretend to be in control than fear the anxiety of having no control over the market or over the environment in which they must exist. The big step rather right now is realizing that you have no control over what the market can do next